Have you ever been confused when shopping for a mortgage about your closing costs and prepaids and how to evaluate the expenses involved with doing a mortgage? Well, today I want to run through the basic closing costs and prepaids and explain that out for you line by line so you can actually know what you're looking at and help when you're shopping lenders side by side to see not only who has the better rate, but also who has the better fees. And like I always say, a rate and fee is like a map and a compass. One without the other is useless information. So let's jump into a screen share and I'll show you what I'm talking about with a line item, fee structure, and we can go over everything that's involved in doing a mortgage. Okay, so jumping into our screen share scenario here, there's two things I want to go over. One, I've got a custom calculator built in Excel that's got our loan qualification parameters here for getting our initial loan set up, what our interest rate, property taxes, home insurance, mortgage insurance, full monthly payment, and your loan amount is going to be. And then I have a fee sheet here that shows all the loan costs. So you have closing costs and then prepaids. And this is going to very closely mirror what we have over here, which is going to be a loan estimate. Now, this loan estimate is what you're actually going to get from your mortgage provider that says, here's the rates I'm offering you, and these cannot change once I disclose these to you. So two things I want to show here. One is my calculator, which is how I can give you a spreadsheet. If you're inclined and if you like Excel spreadsheets, you can actually manipulate the numbers and get a tangible feel for them and run some of your own calculations. And then this fee is this statement is the actual document that we're going to provide saying this is the fees and the setup that we can honor. If someone just sends you a spreadsheet, that's not quite enough. I would say that's great for doing your own calculations and running the numbers, but a spreadsheet is not a binding document that anybody needs to honor. The loan estimate, however, these are fees that we can actually honor and stick to, and this would serve as our disclosure that we're going to send you this is official. Okay, so I want to make that very clear that while using a spreadsheet and getting an email with a quote is very nice, you want to make sure that you're getting your actual loan estimate. And this is a real loan estimate that I've sent out recently, and we can talk about details, but any rates and fees that I talk about in this scenario are going to just be an example for example purposes. For your specific scenario, you want to talk to your loan officer or give me a call and we can check that stuff out. Okay, so basically going through our closing costs here, I'm just going to run through this fairly quickly. So you're going to have something called a discount point, which is what you would pay for your interest rate. Now, if you want to pay a higher fee to get a lower rate, that's called paying points. So if you pay a 1% discount point, that's 1% of your loan amount. And when it comes to this spreadsheet, I've got our loan amount over here, $469. And if you include all your closing costs and prepaids into your loan, so you have no cash out of pocket, this would be a refinance scenario, you'd have a new loan balance of $482. Okay, so your discount point, the fee that you would pay to get a lower interest rate depends on your loan amount and then a percentage point. If you don't pay anything, this is considered your market rate. So no discount fee, no points. You're getting a market rate, whatever's out there. If you want to pay for the fee, let's say 1% is an average discount point, you can do that to get a better rate. Or you could take a credit and then we give you slightly worse than the market rate. So the market rate is kind of the benchmark that you would want to shop, but different lenders are also going to have different discount points available to you. So if you decide, hey, I want my cash to close to be this, and that allows me to pay one discount point, shop different lenders all at one discount point. But you also want to ask, hey, what's your no fee and what's your one discount point look like? So try to get two examples from a lender if you're shopping around. Okay, so extension fee would be our next one. This is if you don't close your loan in time. When you lock your interest rate, you're going to lock it for 15, 30, 45, or 60 days. The longer you secure your interest rate for, the more expensive there's going to be a fee for that. And if you don't close within those 45 days, they might have to charge you a fee. And say that fee would be 0.125% for a 7-day extension. That'd cost you $586. Now, if you cause a delay to your own loan by not providing documents in time, then you're going to pay for this extension fee. If the lender makes a mistake and somehow the loan goes beyond the time frame, they're going to pay for this themselves. So that's another thing to ask your loan officer, hey, can we get this closed in the right amount of time? And if you run into an extension, am I going to pay that? And most loan officers are going to be very upfront with you. As long as you get us everything on time, bank statements, pay stubs, whatever documentation we need to actually validate your file, then you're good. If we have a problem and we cause it to go long or the lender has a problem, that's on us. Okay, you're going to have a processing fee. This would be if there's a processor on the file, processor will interact with title and escrow to facilitate some of that process. A processor could also reach out to you instead of your loan officer. This is another key point. Your loan officer could be the one that quotes you the rate, and then the processor might be the one that asks you for your bank statements, pay stubs, and all your stuff, and they actually process that file. I don't use a processor, so I don't charge anything here. Other loan officers might use a processor, and they're going to charge about $1,000 for that fee. So that just depends. Some retail lenders have a processor, some brokers have it just depends on the setup. So ask about your processing fee. Next one is the underwriting fee. This is the actual fee for the underwriter to look at the file and review it and see whether you're approved or denied. The lender I've liked using lately, I'm a broker, so I can go to different lenders. I like using Everstream Mortgage. Their underwriting or admin fee is $999. Okay, the next fee is your appraisal fee. You're going to pay for an appraisal on your property to make sure that the value is, makes sense on what you're paying for the property. With Everstream, again, this is $750 here in Washington. Some lenders, this might be $950. If you're doing a jumbo loan, this could be $1,250. So a jumbo loan would be like in King County, if you're doing $1 million loan, you can get into that territory up there. And each county has a loan limit. Once you go beyond that county's loan limit, then you're either in a high balance loan, if you're in a special county like King County, or I think like island counties. Some counties have special high balance limits. But once you exceed the county loan limit, then you're in a jumbo loan and you have different requirements. Okay. So appraisal, $750 for what I'm used to. Credit report. Now, this is a big one. You're going to pay for a credit report so that we can figure out what's your credit score and what interest rate can we give you. If you're doing a joint credit report, so you and your spouse, or just you yourself, it's $133 through me and my company. Other companies might charge more for this. I think I have one of the lower charges that I've seen. And this is typically something you're going to pay up front. Now, say you're buying this with someone you're not married to, so two friends, or if you're dating and you're buying a house together, you'd have two of these. So $266 if you're doing two credit reports, $133 if you're married, or you're doing a single report. Okay, now you have a reinspection fee that could be possible if the appraiser goes out and says, hey, there's an issue with this property. You have to fix the issue before we can close the loan. I have to come back out and reinspect this property to make sure that that issue is fixed. They could charge another $250 to go back out and do that reinspection, and then your appraisal would actually be signed off. In most cases, you're not going to need that, but you might. So like I've had properties where the roof had to get fixed before closing. So they had to put a whole new roof on, and then the inspector had to go back out and charge a $250 fee for that. Now, if you're signing up for your loan and there's nothing in here, you're not going to have to pay that. Well, at least with me. So if I don't disclose a reinspection fee and you need one, I'm going to pay for the reinspection fee. I'll eat that cost. If we know the property might have some issues, I'm going to go ahead and disclose, hey, I think we might need a reinspection. It could be $250. If we don't need that, we don't need it, but I'm going to show you this so you have the full picture. Okay, you've got a fee for a flood report to make sure the property's not in a flood zone. You have a MERS registration fee. So this is the Mortgage Electronic Registration System. And this is to get your loan into a national database. You've got a tax certificate fee or certification fee of $85. Okay, then we're going to have escrow and lender's title and recording. So these are going to be your title fees. Now, title fees do not depend on which lender you select. They depend on which title company you select. In Washington State, the seller selects the title company. You can negotiate this with the seller, I suppose, but that's pretty uncommon. This is a fee that you can shop for technically, but this is not a fee that you typically shop for. So technically you can, typically you do not. So on a refinance, your escrow fee is going to be fairly affordable depending on your loan amount. And again, a lot of these fees are going to be based on your loan amount. Lender's title is a title insurance that covers the lender in case you default on your loan. So this is actually an insurance policy for the lender. And if you're doing a purchase loan, this could be like 1,200, and your escrow fee, say you're buying a place for 750K, escrow fee could be 1,500, lender's title could be 1,200. If you're doing a refinance under 500K, these could be a little bit less. Okay, you're then going to have a recording fee. The recording fee is for the county to record the transaction as public record and show you as the new owner with the county records. Some lenders are going to have a foreclosure fee, and this one kind of bewilders me. I don't know how charging someone an extra fee would prevent them from foreclosing. This is a new fee that I've seen within about the past year, and some lenders charge that, some do not. And then you could have HOA fees on your property, and you may have a certain amount of HOA fees due at closing to set up that account. So if your HOA fees are $50 a month, they may require $250 to set up some reserve accounts for that HOA account. Okay, so those are what are traditionally referred to as your closing costs. These would be your hard costs of doing the loan. You also have these prepaid expenses, which I'll go through right now. So per diem interest is a daily interest charge based on your interest rate and your loan amount. You're going to get charged interest from the day of closing to the end of the month. And so if you close near the end of the month, say that's 30 days in the month, you close on the 25th, you would have 5 days of prepaid interest. Interest rate times your loan amount divided by 365. You've got daily interest of $75.49 in this example, or $377.45 for that charge. Okay, and again, depending what time of year that you close, in Washington, you have property taxes due in April and again in October, and they're due in 6-month intervals. If you have a reserve account or an escrow account attached to your loan, you pay into this monthly and you fill up your escrow account. Once that property tax bill is due in April, the escrow account will pay those in full for you. So this escrow account as part of your mortgage is a way for you to pay monthly property taxes instead of 6-month interval taxes. So it kind of makes it a little bit easier, and there's no fee for setting up that escrow account. There's actually a small fee if you don't have an escrow account because it's considered slightly risky that you might forget to pay your property taxes on time. And then there might be another assessments for your HOA, but we don't know, and that doesn't suit this example. For a purchase loan, you're going to pay your first year of property insurance up front. So say your insurance is $120 a month, you'd pay that $1,440 up front. And then they would also collect a 3-month cushion in that account of $360. So when it comes to property insurance, you're paying your whole first year up front, and then you're setting up a little 3-month cushion for that account just to account for any fluctuations. Okay? And as far as having a cushion account, they're also going to set up a 2 to 3-month cushion for your taxes. So your taxes due, like let's say we're closing close to April, there's going to be 6-month taxes due. You're going to have to pay this full 6-month taxes to get that account settled, and then the reserve cushion set up as well. Reserve cushion. Your property taxes due, like maybe there's 0 due if we close May, and then they're only going to maybe collect like 2 or 3 months of property taxes. So these fluctuate depending on the time of year you close. Any of your prepaid expenses are not going to depend on the lender you choose. They're going to depend what your property taxes are, what your home insurance is, and what time of year you close. So these are sort of considered a soft cost of doing your mortgage. So if you add all these together, and let's get these right so we can do a comparison here. You've got closing costs and prepaid. Add those together, you get your total loan costs. Now, the cool thing about this calculator I have here, let's say we're comparing this to another lender that has a processing fee, and they have a slightly more expensive underwriting fee. They have a more expensive appraisal. They have a more expensive credit report. Your title fees are going to be the same. And then all your prepaids are going to be the same as well. So this is a way that we can kind of shop lender to lender and say, hey, more expensive processing, more expensive underwriting, more expensive credit report, and you're charging me a 1% discount point. That's $6,200 difference. Maybe they're not charging the discount point. Now they're only $1,500 difference. Okay, most of that's going to come down to their processing fee. Hey, could you waive your processing fee for me? Okay, now we're pretty close on comparing these two loans head to head. Okay, so that's a lot. Hopefully, this is helpful to talk about. And when we're looking at the actual loan estimate, that's going to be our disclosure. Your discount points are up here. So for this loan, there was a 0.382 charge. let's go ahead and put that here, 0.382. Oh, and we got a different loan amount, but I can fill all this stuff in my Excel chart, so matches this perfectly, so you can play with these numbers and manipulate them. But we've got our discount points, our underwriting fee, and then here's the services you cannot shop for. Now, these two fees up here could be negotiable. These fees are not going to be negotiable. Services you cannot shop for, so appraisal, credit report, flood, the electronic registration fee. This other fee I have in here, the lender I like using, Everstream Mortgage, uses a technology fee of $120, and then your tax-related service fee, $85. Then you go down here, section C, services you can shop for, but like I mentioned earlier, the seller is going to select these on a purchase, and then on a refinance, obviously, you can select those yourself. And these are in different tolerance levels. So section C, I believe these has a 10% tolerance, so these could change by up to 10%. These A and B cannot change at all. Zero tolerance, okay? So something to watch out for and be educated on when you're going to shop your lender. Okay, up here we have taxes and other government fees. So this is our recording fee. Transfer taxes, those are going to be paid by the seller in Washington State. Prepaids, 3 months for home insurance cushion, which would be typical on a refinance. Prepaid interest for 5 days. And then 4 months of property taxes due to build up that cushion. And then here, initial payments to escrow. So prepaids are going to be your building up your cushion account, and initial payments to escrow at closing are going to be whatever's due at closing. So if your first year of insurance is due, that's going to be right here. Same thing, if you had 6 months of property taxes due, that would show up here, and you'd get your total loan cost down here. Okay? So, and then on the first page of your loan estimate, it'll show you, here's your loan amount, interest rate, monthly payment, and then mortgage insurance is going to be quoted in here as well. And mortgage insurance is another thing that you can shop around. So if you're shopping two different mortgage lenders, you want to compare their mortgage insurance and say, hey, have you shopped my mortgage insurance, or is this just your standard rate? When I go and shop mortgage insurance, there's like at least 5 different providers I can check from to make sure I'm getting you the best possible mortgage insurance rate. And mortgage insurance is a factor of your down payment and your credit score, and also how many people are on the loan. If you have 2 people on the loan, you're going to get a better mortgage insurance rate than if you only have 1 person on the loan. So in some cases, maybe there's a spouse and only 1 person is earning the income and the other person has no income, but they still have good credit. You might want to both be on the loan so you get better mortgage insurance. And if you put more than 20% down, no mortgage insurance at all. And your mortgage insurance gets better there's a 3% down, 5% down, 10% down, 15% down. So at every interval there, your mortgage insurance is going to change. Okay, so those are closing costs and prepaids. And if you're doing a purchase, you want to compare lender to lender to make sure you're getting the best deal you can. And you want to get a good deal from someone that can explain the good deal. So if someone's offering you a great deal, but they don't know any of this and they can't explain it to you, I would question whether that's a good deal or not. Most loan officers are going to know all of this stuff. Like my first year in the business, I was like a disclosure kid. And I would help my dad with his loans, and I would explain the disclosures to his customers and say, hey, here's what we're doing. Here's all the break. And I would just go and help talk through these. Because in my day, we used to sit down, 2010, when I got started, you would sit down together. I would explain these to you and point at them with my finger on a piece of paper, and then you would wet sign it with a pen. Now you're going to get these sent to you via email, and you're going to read through them yourself and e-sign them. So your loan officer can hop on a Zoom call with you to go over and explain them. But yeah, anybody should be able to talk these through with you and give you the whole lay of the land. So interest rate, closing costs are the big deal, and then your prepaid should be the same with whichever lender you go through. Title fee should be the same with whichever lender you go through. Okay, that's it. Hope you guys found this helpful. I know that's a huge amount of info I just dumped, and I'll talk to you later. Thanks. Bye. If you have any questions, feel free to shoot me a message, phone call, text, and we'll talk. Thanks a lot. Bye.